Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in, let's take a look and see what people are sharing. If you want to follow me at Finding_Finance, and if you want to join our community, finding-value.com, that's where I dive deeper into these topics, looking at individual companies and potential buy points on those companies. We still have coupon code Mayday that is active. So I went over a bunch of different ratios, looking at different ETFs versus other ETFs, just to see how they are performing. And what we're looking for is we're looking for a low ratio, and we're looking for a potential bottoming pattern and or breakout of a trend line or something of that nature. So I got SILJ up here. I said, I hope SILJ brings the heat. We've got SILJ versus silver, and we are breaking through that downtrend line from a very low valuation point. Last time we were at this valuation point was back in 2016, and it exploded higher all the way to about 0.9. So it went from 0.35 to 0.9, which is almost a 3x in outperformance SILJ against silver itself. And silver went up during that time frame. Silver is now going up, and we're starting to see SILJ heat up a little bit here, where we could see a great outperformance, perhaps even back to that high, where maybe we outperform silver by 3x. And maybe silver does a 3x. So maybe that's a 9x or something on the lines of that of potential total return. And it usually does it in a pretty short time frame. The last one was 1, 2, 3, 4, 5, 6, 7, 8 months in length. Something like that could occur again, and I am positioned for stuff like that to occur. Looking at SILJ versus URNM, we can see a downtrend line that is being broken, and it's at a very low valuation against URNM. Some people would ask, well, why is it doing this? It's because of financial money flow in the system. It has nothing to do with the fundamentals of the sectors necessarily. When money starts to flow, it flows different when the yield curve inverts and then starts to uninvert. And that money starts to flow into gold, into silver, and we've seen breakouts in both gold and silver. And we're starting to see a rotation towards the ETFs like GDX, GDXJ, SILJ, etc., etc. Other sectors may lag behind, and that deals with where we're at in the cycle. When we get a slowdown, people prefer to go into gold, silver, and the mining companies of those. Here's SILJ versus XOP. This actually is from a very low valuation standpoint with a pretty long runway. This also tracks these big movements, the yield curve going up and down. So if the yield curve does uninvert, which it very well could, and this is further evidence that it could because people are positioning in SILJ more so than XOP, we could see an outperformance of SILJ versus XOP here. It looks really good. And then here's SILJ versus COPX. Copper was outperforming till about the bottom of 2024 here. And now we're starting to outperform of SILJ. Back in 2015-16, you could say the big move here that occurred from SILJ to COPX. And then another one here. That is also the yield curve uninverting, inverting, uninverting, inverting, uninverting as we go through it. Financial money rotation is what's causing these things to go up and down. We've got OIH, energy service companies, looking cheap against other sectors. These are at very low valuation points for energy service ETF versus the copper ETF. Look how low we are at this. This is definitely putting in what I think is a potential bottom pattern here. We also have energy service versus the agricultural ETF, and that's also falling wedge, broken out, and looking like it's ready to continue to move on higher from very low valuation standpoints. Doesn't mean it will go straight up, but it means that we'll probably just continue to outperform over long periods of time from this undervaluation. OIH versus SILJ, and I know I just went over SILJ because SILJ was looking really good. This looks a little bit more balanced, and I'm not sure which direction it's necessarily going to go. Longer term, I think OIH is going to outperform. Short term, we could see a further pullback where SILJ outperforms over the next 6, 7, 8 months or something on the lines of that. And then OIH versus URA, which is the uranium ETF. And I use this one because it had more data. Big outperformance from 2011 all the way to about 2017 for OIH. Then URA, this would have been a good time to pile into URA up here and ride URA all the way down to the bottom of 2022. Now it kind of looks like we've got OIH that might have an advantage here from this low valuation point against URA. OIH is energy service companies. So here's GDX. I wanted to see and continue all of these ratios of ETFs against each other to see just who is the cheapest right now and the best set up. So GDX is looking really good against copper ETF from a very low valuation standpoint with lots of runway ahead of it. GDX also looks like it's breaking out against URNM with a bunch of runway ahead of it. Again, this is about financial conditions, less so about each sector itself. Money rotates differently when that yield curve uninverts. And we've got GDX versus XOP, and that does look advantageous for GDX to maybe make a run against XOP. And then we've got GDX against SILJ, and this looks good for SILJ to potentially draw down after breaking the trend line to the downside. And yes, this could go sideways for a little longer, but it looks like it wants to break lower. So looking at this and looking at all the different graphs, SILJ looks to be the cheapest of all of them, and it looks pretty well to outperform everything else, knowing where silver is located in its chart and where SILJ was just starting to outperform silver, the metal itself. So SILJ looking pretty good. I said crude oil having a strong day today. Crude oil to gold ratio, crude is cheap to gold and looking like a retest has been completed. So here's crude oil. It's right trying to break out of that resistance trend line. I'd like to see it break. We've got crude oil versus gold, which we've got a consolidation of a falling wedge breakout and then another falling wedge consolidation. If we zoom in, we have a breakout in a retest that we're just bouncing off the retest here this today or yesterday, because since you guys are watching it the day after. So this looks actually pretty good for crude oil. Let's see if we can get some momentum to the upside in crude oil where it starts to outrun gold. But it's looking pretty good, and we'll see if that can continue. Now, here's the thing. Gold does well when the yield curve uninverts. Crude oil, sometimes you can see a slowdown. So although these charts are looking pretty good, we'll have to see what actually occurs over the next 6 months, 12 months. Charlie Balillo says, U.S. consumer sentiment is nosedived to its lowest point of the year and is at levels which in the past have been associated with recessions or bear markets. Unprecedented to see such a strong stock market, the S&P 500 up 20% year to date, 38 all-time highs, coincided with such a low reading. Now here's something this is University of Michigan Consumer Sentiment Index. These usually bottom when they're low. So you want to buy when the sentiment's really bad. We're at a pretty low sentiment right now, and maybe it bottomed here just recently. We'll see. But these are all recessions. Housing recession, housing recession, housing recession, housing recession, housing recession. Wait, those are all housing recessions. I don't think we're in a housing recession, but we could be. Sentiment is negative, and maybe we've got like a NASDAQ type deal, which is here. But that went from very high sentiment lower. We're at a much lower sentiment starting point from where we are today. So it is still possible that we go through a slowdown / recession, yield curve uninverts, and maybe the stock market, like technology stocks, get hit. Maybe not. We'll have to wait and see. JC Parrott says the largest component of the Dow Jones Industrial Average is breaking out of a multi-year base to new all-time highs. Is it bad for the stock market when its biggest weighting is just now starting to go up in price to a new all-time high for United Health Group, UNH? And this is a stock that I really, really liked. In 2009, it really dove down. This was one that I did invest in 2009 and 10. It was at 20 something dollars. It's now trading at $570. That's a big move. S&P 500 versus S&P 500 equal weighted 2-year rolling returns. It says, is this time different? Recession, 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 and looks like we're in that recession area. Housing crash. This was the NASDAQ crash there. Housing bubble. And this one here was that COVID shutdown. So I don't know what to think of that. But we're back at that level. Is a recession or slowdown coming? Some of the data suggests that one could come. Other data suggests that it's not maybe here yet. But again, I'm in the camp that, yeah, we could definitely see a slowdown. It is possible. Another indicator that the tech party might be nearing its end, credit spreads are giving the same warning as before the 2001 NASDAQ crash. They say a fish rots from the head down, and with tech now 30% plus of the S&P, it's going to get very smelly from here on in. So this is the last time CC divided by B diverged. It was the dot-com warning. So there's that divergence up, and then we had it in 2001. We've got that same divergence here going on between CCC, RHS, and single B. Low quality credit dispersion is the widest since 99-2022, and it's the spread between the two that we are looking at here, which we saw that spread blow out in some of these areas here. And it's blown out today. XLB on log chart, this is the mining sector, looks healthy and ready. 3 years of sideways action is about to unfold. We've got a strong resistance level there, and we're trying to break out. We'll see if we can break to the upside here. For materials, that is XLB, looking pretty solid by Casper here. Lance Robert also talking about the credit dispersion. I don't need to go over that again. In gold we trust, it says we are exactly on track for our year-end of year target of USD for gold, 2,665 for that price. They've got the intermediate status of the gold price projection until 2030. Gold and projected gold price in USD from 1970 all the way to 2030. He says, in his opinion, the end of year target is 2,665. And the gold price projection up at 2030 is USD 4,821. Where do you guys think the price of gold is going to go? Put it in the comment section. I'd like to hear what you guys think in terms of the potential pricing that we could see in gold over the next decade. So where do you think the price is going to end up in 2030? Do you think it's going to be higher than 4,821? Do you think it's going to be lower? Do you think it's going to be way higher, like 10,000 or 20,000? Let me know your opinion. Grady says, can post this chart now as I think it has turned inside the massive blue triangle for the last time. The oil sector lead the commodities baby bull move up from the bear low in 2020, which he called real time, of course. This chart says it is now time for precious metals to shine. The move in precious metals miners has only just begun. The charts are now set up to climb the right side of the huge rounded bottom. Most will not get into a bull market mindset until it's too late, though. So be one of the few that catches the whole move, the move of a lifetime. So that's what he says there. We've got a potential break of the Huey divided by XLE. So what he's proposing is that we could see a move of the Huey versus the XLE, the oil company. And I just have those ratios up above. SILJ looks to be the cheapest. and best positioned of probably all of them. Around back, we've got U.S. retail sales are down 0.68% year over year. So retail sales are flat, and they generally flatline before recessions. Flatline, and we've been flatlined here since about 2021. So we could be in a recession. It is a high possibility, and this usually occurs before it. The last 5 trading days, we've got home builders are up almost 15%. Regional banks are up 13%. Small caps up 10%. REITs up 6%. Value up 4%. And gold up 3%. While Netflix is down 5%. Nvidia down 5%. Amazon down 3%. Microsoft down 2.5%. And Google down 1.5%. Just as a comparison there. And that's what I've got for today. So we'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. And that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.